Discovery is the next stock we're going to talk about in this health insurance conversation myself and Wayne McCurrie have been having. This, of course, is a big player in the local medical aid environment. Really only began its business in about 1992. That's Adrian Gore, but it really is then now principally a life insurer, and then it's added asset management, short-term insurance. It's expanding its model globally with a direct ownership of the Vitality business in the United Kingdom, but it also has a bunch of joint ventures that we've referred to already earlier in the show. Market capitalization, 83.5 billion rand, price earnings ratio 23, and a dividend yield of 1.35. Much beloved by its customers.
Yes.
Vitality.
Their biggest single asset is what every other life insurer would love to have, a customer base that adores you. And what they've done, the whole business model essentially is to sell more and more product to the customer base. So they're starting banking, they're doing, as you mentioned, they're doing life, they're doing asset management, investment products, everything. They're selling everything through to the channel, and that's a very, very good strategy over time. I mean, Woolworths have done that very, very successfully.
And they use the technology base in order to work out which clients they really like to have and then focus on them.
Their big advantage is the whole information they got about you and their systems that support that, because they're selling that worldwide and very successfully.
And the deals presumably worldwide are that they get a cut of any improvement in the profitability of the book.
And they'll get a standard service fee, and they're servicing, they're providing this service in rands. They're providing the infrastructures here, so it's cheap compared to overseas.
So do you think they run those sort of data things on the local data warehouses, and that's for Generali, John Hancock, a whole bunch of others?
A lot of the, I think the overwhelming majority actually runs out here, just down the road.
Interface people that'll be over there.
But they run the backbone of the machine here, so it's a very good product. Now, Discovery's in a very different part of their business cycle compared to the other life insurers in South Africa. They're growing. So they're taking what's called new business strain, because they're investing in these new ventures, and it all costs them money. I mean, even though they're only partnering with these people.
And is that why the share price looks as it looked there? I think we just saw it flash by. It showed a little bit of a sag and a bit of pressure in recent quarters.
So when you look at their last set of results that came out, you know, for a 23 price earnings ratio, and maybe a PE is not the right way to measure a life company, but a 1% dividend yield is low. The other life insurers are 4, 5, 6% dividend yields. The earnings growth normalized was up 7%, which is not great for this type of rating.
People expect excitement.
You expect 20 plus, roughly.
And the idea that they're investing heavily in the business is nice, but still, you'd like to see.
I think they've got a fantastic product they're selling out there, obviously, and I think that all of their ventures will pay off. But I mean, I can remember talking to the now about to retire financial director there. He said these things are wonderful, but understand the profitability comes in quite a few years' time. It doesn't come initially. So, you know, you've got to invest in this for 3, 4, 5 years, then you start to get the payoff.
Wayne, unfortunately, we're running out of time. So, hot or not on Discovery at these levels?
I'll sit back and wait.
Okay, you're going to go not hot. I'm going to go hot. It's one of our core holdings. And, of course, I'm a patient guy.